All right, bet. So capital preservation. We're gonna get into capital preservation, and then I'm gonna get into trader DNA build and pretty much what that is. Like, so y'all get clarification on exactly what that is. So let's get right into it. I won't be able to see the chat while I'm teaching, so yeah. So I'll be looking back in the chat every now and then. So first thing first, it says the power of capital preservation and trader DNA build. All right. For the people that already know about capital preservation, we're gonna go in that file also, which is this one, just a simple 50K account explanation. And then for the people that don't know about it, we're just gonna go through this, but we'll go through the 50K example as well. So let's get right into it. Let me bring this here. Bet. So it says, what is capital preservation? All right. It says capital preservation is the foundation of longevity in trading. It's not about how much you make, it's about how well you protect what you already have. All right. Most traders fail not because they lack strategy, but because they mismanage risk. So one example that I always give is working a regular 9 to 5. If you work in a job and you get a paycheck, but the new iPhone come out and you decide to just buy the phone without preserving any capital, without saving any type of money, that's you're mismanaging your risk. All right. Now, obviously, everything that I'm saying now makes sense and it's pretty self-explanatory. But I'm just going in depth because later on you're going to see how I incorporate that with trader DNA. Because some things you need to focus more on, and it's okay for a person to lack in a certain region because it's overcompensated in another region. But we'll get into that. But boom, then it says, think of capital preservation as your trading immune system. Without it, even the best strategies will eventually fail. Your account balance isn't just money, it's your ability to stay in the game, learn from mistakes, and develop edge that separates consistent traders from those who blow their accounts. So that's one way I like to put it. Look at it like a game. You're not just risking your money to trade, you're using that money to stay active in the game that you're playing. You're using that money to stay active. If you don't have that money, you can't trade. Meaning, if you have a 50K account and you don't keep that 50K account above the max loss limit, the game is over. So how do you preserve that? How do you make it last? That goes into what we see on the right side, which is survival, time to learn, and confidence builder. It says survival first. So just like playing the game, your first job is to survive. Like that's low key with any game. You always start off low, and then you get better. That's the whole point of a video game. So that's survival first. It says your primary goal is not to grow, it's to survive long enough to master your craft. So what y'all do is y'all don't want to, when you're starting to trade, you're still taking like your beginning level, like you're still trying to learn your strategy and do everything at the same time. Like, no, you need to just learn your strategy and then start trading. But when you're trading, you're not just trying to make money. There's no point of just trying to get a payout. Just get a payout. It may seem off and it may seem odd. It's like, damn, the reason I am trading is to get a payout. Why am I sitting here trading for another reason? The reason that is because money is just a byproduct of the skill. Any skill you learn in life can make you money. If I become a basketball player and I go to the NBA, then I'm getting paid because I got a skill, I got talent. If I'm a music artist and I'm a producer, I'm making money because I have a skill, I have talent. If you're a trader and you craft and you allow time to master your own craft, you just allow things to play out. Eventually, you're going to get paid for mastering your craft, the skill, okay? So in order to do that, you got to survive. You can't, how are you going to master a craft blowing an account after account after an account after an account? Okay? So you got to survive. Let me make sure this is right. Boom. So that's number one. Number two is time to learn. It says preserving capital gives you the runway to refine your edge and build experience. Like I said, you want to survive. Pretty much the same thing. If you're sitting here trying to get a payout while also struggling, you're not surviving. You're over here trying to live a lavish life. You're trying to trade like a lavish trader, but you're not a lavish trader yet. For example, I was talking to Ramel about this today. I was like, I'm gonna shift into a different example for you though. in a sense, it's like you're trying to take. You want to live at A. You trying to be an A+ trader, but your knowledge is only at a C+ level. You see what I'm saying? You gotta like slow your roll and actually learn throughout this process and grasp it enough. And throughout that time of actually learning and grasping it, you're not rushing the process, which gives you time to perfect your craft. All right. And then it says confidence builder. It says proper risk management creates a psychological foundation for disciplined trading. It's weird. It's like Ramil gave me this analogy today. I was on a call with somebody or whatnot. We was talking and we was like, a good analogy. Ramel came up with a good analogy and he was like, risk management is like, you know the stuff, the equipment that firefighters wear to like, so they don't get burned by the fire. He's like, when you're trading every day, you're gonna go through a fire every day or multiple times. Like it's inevitable to happen. Risk management is like that coat that don't get you burnt. Like, yeah, you're gonna get burnt, but this coat don't get like it'll keep you going. That's hence the name capital preservation. Preservation, you're trying to preserve something. So using that coat allows you to preserve your life. And in a moment like that, to help people get yourself to safety. Same thing with trading. It's to stay in the game so that you have time to actually learn and craft your skill. Okay? It's allowing you to forward test. What is forward testing is where you're actually risking your money on your prop firm or your live account while also learning at the same time. It allows that, but at a slow, consistent rate. All right. Let's see. Then it says how capital preservation works. My bad, I'm trying to do this on two different screens. It says how capital preservation works, right? If y'all want to take a screenshot of this, you can take a screenshot of this. Well, now I might send it in the chat once I'm done. We'll see. But this is pretty much the bread and butter of how capital preservation works. It's not just about risk to reward or your RR. Like it's not about just your RR. It's about it's the math behind it. Okay, and I'm about to explain it. So step one, it says set your loss limits. Determine your daily or your weekly loss limit. Obviously, depending on the type of trader that you are, and that's pretty much what we go through here in Trader DNA build. The type of trader that you are, determined based on that, will determine if you base that daily or weekly. But determine your daily or weekly loss limit. This establishes your emotional and financial boundaries before you ever enter a trade. Okay? So that right there, emotional. It establishes your emotional, financial boundaries before entering a trade. Which is why I said capital preservation and risk management is like an indirect kryptonite to psychology. That's the best way I could put it. It's like negative psychology's kryptonite because it forces you, because you're the amount that you're risking, you're clarified on everything else the amount that you're risking. So why be afraid? See what I'm saying? So it says if your account, so for an example, it says if your account is 10,000, perhaps your weekly limit is to lose 600. That's your line in the sand. Pretty much saying by the end of the week, the max amount I'm gonna lose is 600. How do you get it? And you don't just say that though. You don't just say that and take trades and just by the end of the week you make sure you don't lose 600. No, you want to actually calculate it. So how do you calculate it? It says divide your total loss limit by the number of trades you plan to take. Not just saying, oh, I'm going to lose this amount. And what I'm about to explain to you is very self-explanatory and very simple, but we don't really think about it. We make it really difficult. It's very simple. It says example. Just like step one, how it says our weekly limit was 600, we're putting it in step two. Example, my week limit is 600. We're right here if you guys don't know where I'm at. Over here. It says weekly limit is 600. You divide that by 6 trades, okay? Let's say that 6 trades was the max amount of trades I want to take per week. 600 divided by 6, which gives you $100. You're risking $100 targeting a 1 to 3. All right? You can target a 1 to... Well, we'll get into that. Let me just finish this out because that's going into step 3. It says $100 risk per trade. It says this mathematical approach removes guesswork and prevents oversized bets. Boom. And if you're with Project X or Top Step X, just set your parameters right. honestly. Either I can get you right with that, or Romel can get you right with that. Just make sure you set your parameters right so that it actually locks you out of your account if you even try to do anything. It's impossible to get over it. All right. So that's that. Then it says here, number 3, target favorable RR ratios. Right here, I put a 1 to 2 just to like be sympathetic, but no, it needs to be a 1 to 3. It says aim for at least a 1 to 3 risk to aware ratio. It says with this structure, even a 40 to 50%, really it's a 30 to 40%. Because if you take 10 trades and win 3, you'll be profitable. Hence the name 1 to 3 risk to reward. Even with a 30 to 40% win rate, obviously 40 and 50 win rate, keeps you profitable. It says you don't need to be right all the time. You just need to have the math on your side. Number 4, it says track and adjust. You learn through numbers. Keep detailed records of every trade, win or loss. The data reveals what's actually working versus what you think is working. Adjust your approach based on evidence, not emotion. So now that's that. Now I'm gonna get into the psychology of about this. Before I get into the psychology part, do y'all got any questions or anything? It says Wayne says I'm not hearing the audio. Zeke, it says when you're done, can you show proper top step X settings? Yeah, I can show you. I can show you my Aqua account. It's the same thing. Project X and Top Step X is the same thing. But yeah, hopefully y'all understand everything I went through there. Now, when it comes to psychology, because I just want to tap inside of psychology after mentioning those few things. I was talking to Romel today, and we was just talking about the market is okay. The market is inconsistent. You have a choice to be consistent. That's how I'm starting. Meaning, like, the market, you're the only entity in the market that is able to be consistent. The market isn't even an entity, which pretty much that's why I'm saying it. You're the only person that has the choice to be consistent while trading. The market is highly inconsistent. 1 minute is doing this, next minute is doing this. Next minute Trump is saying this. Next minute Powell is saying this. Next minute it's saying this. Next minute it's doing this. Next minute we're breaking all-time highs. Next minute we breaking all-time lows. Next minute we going here. Next minute we going there. You see what I'm saying? It's hella inconsistent. But you, as a person trading the market, you have a choice to be consistent. And that hit home. That hit home to me and Romel. It kind of hit us because we was like, wait a minute. Like, it was self-explanatory. It's pretty normal, but it's like, damn, we are actually the only ones that can be consistent in this market. It's just like life. As I was saying that too. It's just like life. You're gonna have good moments and you're gonna have bad moments. It's inevitable. Your job as a trader is to maintain a positive P&L through your losses. Your job at life is to maintain a positive P&L. Stay positive. Make sure you continue to trade. Make sure you preserve your capital and then scale. Instead of making more money, how about you get another account? I forgot where I heard that. I think I heard Romel or somebody else say that, or somewhere. I didn't come up with that though, but it's just simple. Well, one thing that we always try to do is we try to make more money on the trade. Instead, Akram. Shout out to Akram. Bro is tough. What we do is we sit here and try to make more money on the trade, which instead we need to start multiplying a consistent amount of money that we make on the trade. Meaning, instead of, let's say we can consistently make $600 per day, consistently. But you're trying to make 1,000. Instead of trying to make 1,000 of more money on the trade, buy 2 accounts. Why do I say that? It's because you're not forcing anything. You're not doing it. You're not breaking a rule. You're doing the same thing that you've been doing, just doing it on multiple accounts. Make sure alternating trades on multiple accounts makes you unbeatable. Yeah, to make sure you're taking the right trades. Because if you're not, then hey, it's just a double-edged sword. Yeah, exactly. So pretty much what Romel said. It said one trade for 2K, or versus one trade for $400 on 5 accounts. You take one trade on 5 accounts, $400 TP. 2K is harder, exactly. Way harder. Way harder. So now here's the thing though. This is what I'm trying to explain to y'all. Let me go back to sharing my screen. Come here. That's exactly what I'm trying to explain by compounding accounts. Yes, OJ, compounding accounts is more important. Compounding is more important than making a profit. Because when you make a profit, it's just harder. I know y'all heard the saying, going from 0 to 10,000 is way harder from going to 10,000 to 100K. Because from 0, you got to start with nothing. You got to get it from the ground up. That's like trying to make 2K in one trade. But if you got 10 bands, you can get to 100K. Why? Because you can compound. You have something to start with. So that's the same thing with multiplying accounts. Instead of making 2K on one trade, instead of going from 0 to 10K, you just compounding, you just multiplying your profits. That's when the real money come in. That right there is also another part of I don't even want to say capital preservation because it's not. That's just self-explanatory. Compounding. That's what you want to do. So like for the people that are in here that struggle with making a profit and their main issue is holding a trade, for anybody that's in here whose main issue is holding trades, we just somewhat solved it, or at least connected at least a few dots. Because now you know, all right, bet my approach to trading, I'm trying to make more money. I'm trying to make more money, and that's what you don't want to do. So instead, you say, you know what? If my issue is making more money per trade, what if I just multiply the accounts and just make half? And make the amount I know I'm supposed to make. So now you don't have to deal with that psychological burden of trying to hold a damn trade. You see how risk management and like doing shit correctly indirectly affects your psychology? It just indirectly affected your psychology. You're trying to make more money, but instead of, and you know what hurts you, which is holding trades, you just multiply the accounts. Simple. Ramel, he said, but you made it look easy, 14K. I'm getting on your level. So let me see, let's go back. So I just want to get into that right there. You know what I'm saying? Oh, you want to do what's sustainable. That's another thing. You want to do what's sustainable. You want to do what's maintainable. You don't want to do what the market does because the market is inconsistent. And if you're going with the flaws of the market, your pockets are going to be inconsistent as well. If the market is inconsistent and you keep on basing you base your stop loss and your TP. Yeah, I'm talking. You might have to just turn me up. Go put on if you're basing your stop loss and your TP to the market, your pocket's gonna also be inconsistent because the market's inconsistent. But if you go for a specific amount every day, day in and day out, 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 you're gonna come out with a return. And this is me indirectly trying to turn y'all into mechanical traders. Ramel's job is to teach y'all everything that y'all need to know about the skill. Ramel's here to teach you everything about the skill. He will get you right. He got Wick Sauce. He got Wick Sauce 2.0. He got ICC down to a pet. He got Holy Grail. I'm here just to make everything. I'm here to make you mechanical. Every strategy is mechanical. Every strategy tells you to come in and come out of the same trade at any time, no matter what. You're not mechanical because you don't know how much you're going to risk. Damn, it's a lot of people whose sound is messed up. I don't know what that is. It don't happen with you. It only happened with me. That's weird. I don't know what's going on. I gotta get it in the monitor. I mean, laptop. Okay, but hopefully most of y'all hear me. But it'll be recorded anyway, so we good. All right, cool. So we gotta fix that. Okay, yeah. All right, cool. So look, what do we need to fix? What the hell? No, not my damn phone. All right. Anyway, let's get back on track. Let's get back into this. So we established that pretty much the 3 pillars of capital preservation. I need some water, man. Okay, I got some here. It says why capital preservation works. After everything I just said, what I'm about to say should make sense. It says removes emotion. By defining clear structure and boundaries before you trade, you eliminate impulsive decisions driven by greed. Your rules make your decisions, not your feelings. So by indirectly affecting your psychology and taking that and replacing it with risk management, it indirectly makes you make decisions based on rules and not feelings. You're pretty much plugging in that robot mode. You're plugging in that robot mode into yourself. So where psychology and emotion may be there, you're taking that out and replacing it with the risk management. Not rules, but risk management. Risk management is your rule. To abide by your risk, that is your rule. This is what I mean by mechanical trading. It doesn't have to do with a strategy. It has nothing to do with a strategy. It has everything to do with you, and that's what I'm here to do. All right. So look, hey, for the people that's in the chat that's saying that they can't hear, if you turn it up and you still can't hear, it'll be recorded. There's nothing that we can do right now. We gotta just fix it. For real. So y'all don't gotta keep saying that y'all can't hear. If it just turn it up, make sure everything sound right. And if y'all still can't hear, it will be recorded. So I'm looking at the chat. And for the people that can't hear, awesome. Anyway, it says introduction to tradability and trader DNA build. All right, yeah. So let's get into that. Let's get back in here and let me make sure this is right. If you want to see my strategy, I can show you. I can show you outside of the call, but I don't like showing it to everybody. Yeah, it can be another time outside the call. But let's get into everything else for sure. Damn, where's it at? I'm trying to look for the right. Wait, it's on here actually. All right, introduction to trader DNA build. So that's capital preservation. That's how you do it. I'm gonna put this file. Once this call is over, I'm gonna actually put the file of a simple 50K account in here so that y'all see, so that y'all can see like the logistics and actually how to do it. And then I'm gonna show y'all some numbers. Actually, I might do that now. Before we get into the trader DNA build, I'm gonna show y'all some numbers on pretty much how everything lines up. I'm gonna show you how everything lines up. Give me a sec. No, I'm trying to transfer over two different files, two different tabs on me. You said so. So this is in the back of your head. While you're trading, or it's a mindset thing. It's just a mindset thing now. Yeah, it don't. Yeah, it's just me. If I'm getting what you're asking me, are you pretty much saying everything that I just said? Is it just a mindset thing, or is it lingering in the back of my head while I'm trading? So I get exactly what you mean. Yeah. To which one? Pretty much the answer probably is just a mindset thing. It's just me. I don't even think about it. It just is what it is, you know. Because once it's brought to light, once it's brought to your awareness, you can't really block it out. It's hard to really block out anything that's to your benefit. Think about it. Us as humans, anything that's to our benefit, you're gonna accept it. So if this information is to your benefit, it'd be kind of odd for a person to reject it, you know. So it'll be a mindset thing for you too once you get it. It won't even be back in the back of your head. It'll just be you. Anyway, so it says scenario planning for daily outcomes. This right here with capital preservation, I'm going to just skim through the top part. I don't know why my stuff is glitching like this. Why it's like, okay. I have to do it like that. All right. So I'm going to just kind of skim through this real quick, and then I'm going to just get to the numbers. So look, 50K account, your maximum drawdown is 2,500. That's the maximum that you can lose, and your profit target is 3K. Don't lose 25, make 3K. Simple, cool. With that, this is your parameters. It's saying you're going to risk 250. I'm not going over this because I already went over this 3 times, so we're just going to skim. You're risking 250 to make 750. Second trade, you're risking 150 to make 450. Taking 2 trades a day with the 1 to 3 risk to reward, which is really a 2 to 6 based on the amount that you risk. Instead of taking 1 trade, 1 to 3, you're taking 2 trades, 1 to 3. Meaning by the end of the week, taking 2 trades, as long as you win 4 and you lose the other 6, you're profitable. And if you win like 33, like 3.3 trades, you're still profitable by the end of the week. All right. So now these are the 3 different realistic, not 3 different realistic, but the 3 different scenarios. It says best case scenario, both trades win 750, 450. That's 1,200. Your realistic scenario would be first trade 750, second one minus 150. You won one, you lost one, you up 600. And then your worst case scenario, you're down 400. Okay. It says, let's go down here. Oh, it's not wrong one. It says, boom, right here. With a 50% win rate, this is just simple. This is just the most generic way I can explain capital preservation in with numbers. With a 50% win rate, Monday and Tuesday, you win 2 trades. Mind you, that's 4 trades total. Okay? You took 4 trades. You're in profit. Wednesday and Thursday, you also lose 2 trades. That's also 4 trades. Now you done took 8 trades total. You've won the same amount that you lost. And then Friday, you won 1 trade and you lost 1 trade. That's 5 trades each. Meaning you lost 5 trades and you won 5 trades. You still end your week in profit $2,200 just by taking the right trades and multiplying your outcome. Calculated inputs equals multiplied outcomes. Okay? And if you calculate your inputs, your outcomes will multiply each and every time. All right. It says this example demonstrates that even with a 50% win rate, consistent application of our risk to reward strategy can lead to significant weekly gains, quickly approaching their profit target. By that, I mean on your prop firm account. Okay. All right. And then here, let's get into this part. I don't even need to get into much. Pretty much that. That's just the most generic way I explain it. Optimize risk allocation. Okay, cool. Yeah, so I just wanted to show y'all some numbers, and yeah, that's that. So now, trade DNA build. I had put up a poll. Let me see. Let's come here. Change stream, entire screen. Hopefully my stuff don't glitch, because I really hope it doesn't. Okay. So I had put up a poll in the chat, and I said in the announcements, and we not went over, but I dropped a poll and I said volunteer for one-on-ones. I said, would y'all be interested in doing a one-on-one? So now that we up here, let me know in the chat who wants to come up here for a Trader DNA build example so I can explain to everyone how I go about doing this process. It's not very long. It's pretty simple, but it's just as an example. All right. Let me get my charger real quick. Masiri, for sure. I got 40 votes and ain't none of y'all texting. Come on, man. All right. All right, give me one sec. Let me put up my shirt. All right. Can you hear me?
Yeah, loud and clear.
All right, bet. And how do I pronounce your name again? Is it Masiri?
Well, we can go by Quinn. Quinn, my real name.
Quinn?
Yeah.
Okay, bet. For sure, Quinn. All right, so let's get right into it. So now for everyone that's watching, pretty much right here is how I'm gonna speed everything up. It's gonna usually I'm sorry. Somebody asked a question. It said trader DNA, meaning scalper, swing trader. No, Trader DNA as in meaning scalper, swing trader, etc. Nah, pretty much means I take the trader and whatever that they're going through, and I put them where they need to be. Either if they need to be a scalper, swing trader, or intraday, I can do that, as well as determining their risk to reward, win rate, and win rate based on the type of trades they're taking, as well as their trade frequency, and pairing them with the right capital preservation based on their trade frequency. Peso, you said that I just started. Nah, I've been started about 30 minutes ago. But we get into the second part now. You not one-on-one. Let me see. All right. So now for the one-on-one. So yeah, Quinn. When it comes to your trading, give me a rundown of exactly how you trade and what is hindering you. Anything that's not skill-based. Anything psychologically that's hindering you. If you feel as though the type of trader that you truly are, is it the type of trader that you're actually trading as? Like, for example, you want to swing, but you scalping. Something like that, as well as a little bit about your strategy. If it's getting you enough trades, or do you feel like you need to be more patient?
I would say, well, initially I started to do swings, but I've kind of cut that down to doing at least At least getting a couple intraday trades. So my goal is to get down to at least 6 trades a day. I'm trying to focus on that. So intraday trading, up to 6 trades, and my psychology is pretty solid. The main thing I've been realizing this week was really being patient, waiting for price to come into the ranges, waiting for price to, do what it has to do and take the setup instead of jumping into things. So I've been stacking wig saws, gaps, and also Wick Sauce 2.0 and a little bit of Holy Grail here and there when I can actually sit down and mark it out.
Okay, for sure. You said 6 trades, so you really low key on more so on the scalping side, really. I would say. Would you agree or no? Based on the way.
I haven't. I never scalped before. Normally, when I go into trades, I'm looking for in between 1 to 3 to 1 to 8. The past couple of days, even though I've had like wins and losses, I'm getting between 1 to 3s and 1 to 8s.
Okay. And what time frame do you take your trades on?
5 minute, 1 hour, sometimes 15.
But I would assume it's loud, definitely hard. Okay, it's hard to hear. I'm gonna just go to my phone now because now I'm not sharing my screen. So give me a sec. Y'all should for sure be able to hear me. All right, can y'all hear me?
Now you extra crispy.
All right, I'm crispy. All right, cool. Sure. All right. I don't know what it is, man. Like, I go from much better. Okay, dang, was it really that bad? Okay, whatever. It'll be recorded, so y'all gonna get the sauce anyway. Okay. Anyway, my bad. I lost my train of thought. Yeah. So I said I would assume that you take most of your trades on the 5 minute.
Yeah.
Yeah. Okay. So, if I'm wrong, I'm wrong, but it's not going to affect you in any type of way. To me, 6 trade. How long do you usually trade? You trade the whole session, or you just trade for like an hour or two?
I trade in between 8:30 to 12. I'm usually up around like 5, 6 a.m. So I'm gonna be looking at the chart around that time. But I don't really take trades until a little after market open.
And then how long do you actively just sit on the chart trade right then and there?
And between that time, in between like at 9 to 12.
It's about 3 hours.
Yeah.
And throughout that time, you take 6 trades. Okay, I can see that. Okay, all right, understood.
Sometimes, not all the time. Sometimes.
You said all the time.
Sometimes, not all the time.
Okay, sometimes. So, what do you? What's your average? How many trades do you take on average?
Since I started Top Step this week, I've done in between like 10 to 15
trades in a day.
Yeah.
Okay, so you scalping. Now, I would consider that scalping, bro. I'm not gonna lie. Okay, so if you don't agree, then you can call it intraday. But I would say scalping. 10, 15 trades, cool. So the trades that you're taking, are you trading prop firm or live?
Right now, since I just started this eval account, is prop firm eval.
Prop firm. What's the max drawdown?
Since I did the Top Step 50K, I think it was like 2,500, 2K. I think
how much you risking? How much you risking per trade, or is it just randomized?
I've been doing one contract so far since this is my first time doing futures.
Okay, but how much are you risking dollar amount? Because one contract doesn't really determine a set risk.
Since I think it's micro NQ.
Mm-hmm.
It was like $100 per contract.
$100. Okay, so you're risking about $100 a trade.
Yeah.
Taking 10 to 15 trades.
Yeah.
Okay, so there you go. You just identified the issue. So, boom, 50K account, right?
Mm-hmm.
Max drawdown is 2,500. 2. Number 3, you're taking 10 to 15 trades. Cool, but risking $100 per trade. That's the issue. 1, you can either decide what you want to leverage on. You can either say I want to continue taking more trades, meaning you will have to lower your risk, or you increase your risk. You increase your risk, or you increase your risk or keep your risk the same, while also but lowering your trades. So
Okay.
that's what I'm not saying. I'm not saying you're gonna make the decision now. I'm just bringing everything to your awareness. This is just an example to show everyone else. Okay. Um. So that's pretty much that's pretty much what you will want to do when it comes to the amount that you're risking. Because do you see the imbalance there? The max amount that you can lose is 2,500. But the
Yeah.
max amount that you've been risking per day, taking 10 to 15 trades, is $1,500. While yes, you're probably not going to lose 10 out of 15 trades. I don't know the type of trader you are. So yeah, my question to you now is, what's your win rate approximately? Like, where do you if I were to tell you to take 10 trades, how many would you win?
On average, since I started this week, I've been getting. I got 45%.
Yeah, and your 45% win rate does not match your trading frequency. Because you have such a high trading frequency, meaning your win rate has to be a little better.
Yeah,
The reason why
definitely.
your win rate has to be better, are you targeting, and you said you're targeting a 1 to 3 to a 1 to 8?
Yeah, depending on how I see or how I do that the analysis. Initially, my starting rate is 1 to 3, but if I see if
Okay.
it could go higher, depending on how far the gap is,
So based on those two, what's more guaranteed, the 1 to 3 or the 1 to 8?
definitely the 1 to 3.
Have you taken any trades that went to a 1 to 3, but you try to hold it to a 1 to 8, but now it hit stop loss?
Uh, I had probably 3 or 4 of those this week so far.
3 or 4 just this week?
Yeah.
Okay, exactly. So what it sounds like is, it sounds like step number one, you need to lower your trading amount. 10 to 15 trades is 10 to 15 trades, and for you to call that intraday, in my opinion, if I'm wrong, Ramel, let me know. 10 to 15 trades in one day, and for you to call that intraday shows me like, okay, there's some type of imbalance there, that where it's like, okay, in your head, if you think that's intraday, nah, that's way more on the scalping side. Intraday, in my opinion, is anything that's less than 5 trades. The whole session. The whole session. Anything that's 5 trades or less, that is intraday. Anything over that is push and scalp. But I would suggest for you, he said, yeah, that's scalping, or hold on, let's see what Ramel says. High frequency? Like a high frequency intraday? Is that what you mean? Like something like that. Yeah, something like that. Okay. I could see that, but 15, like imagine taking like 12 trades. Like that's a lot of trades. I don't know. Anyway, that's besides the point. So this is what you need to do. It's very, very simple. And you might want to, do you have do you have your notes open, right? Open your notes or something.
Yeah, I'm typing it right now.
Okay, cool. So jot this down in this exact order. Win rate is currently 45. Win rate is currently 45%.
Mm-hmm.
Okay. Number two is my limit. It says my base limit is a 1 to 3, but casually a 1 to 8. Take your time to write that. And then after that, and then you ain't got to write exactly, write it however you want. And then exactly right after that, you want to say 10 to 15. Oh, I'm taking anywhere between 6 to 15 trades per day. Because you said sometimes 6. So 6 to 15 trades per day. Put it down. And then now I want you to draw a arrow going around. Well, no, you can't. I'm tripping. I'm thinking you're writing. Damn, you can't. I'm thinking you writing. I was going to say draw an arrow, but now under that, just say trade frequency / win rate are unequal or are imbalanced. That's the issue, and you want to circle that. That's your problem right now. So now for the people watching, you see how I just dissected what his exact issue was. For everyone is different. Someone, it might be, hey, they got to get out of trauma. Some person, it might be, hey, just like him, it's like, yo, I got it. We just decided, okay, bet it's his trade frequency and win rate. That's what's hindering him. For some person, it might be they risking too much. For some person, it might be, oh, they're getting 100K accounts, but they really need a 25K account, or they just need help. You know what I'm saying? Stuff like that. So yeah, so you took that, you wrote that down, and go ahead and circle that, or you got that written down. So now you've identified exactly what your issue is. So now you have to make a choice. Do you either want to lower your risk and take 10 to 15 trades? Or do you want to increase your risk and take less trades? I'm going to tell you this. The more you're in the market, the more you lose. The more you're in the market, the more you emotionally adapt to the environment. And I promise you it's not adaptable. The more you trade, the more you become entitled to the market. It's like you feel connected to the market. The less you trade, the more mechanical it feels. You're getting in and out and you're not attached to the outcome. That's all I will say. You, like I said, you ain't got to make that decision now, but think on it and actually text me. I know this is for the group, but actually text me. Let me know. Exactly.
Yeah, definitely less trades at a higher risk. That's something I wanted to work on.
You would want to what? Say it again.
Definitely less trades at higher risk. That's something I want to work on.
Okay, perfect. So now, based on the type of person that you are right now, how you feel, what's the perfect amount of trades for you per day? Because that's what we can adjust. We can take the amount of trades that's perfect for us. So,
Like
what's perfect for you?
when you did the last training for risk management or capital management, I would definitely love to get down 2 to 4 trades a day max.
2 to 4 trades max. Okay, perfect. Boom. So now this is what we're gonna do. We're gonna, because you're going from. I would want to put you at a 1 to 2, but I'm not gonna put you there yet because that's gonna be very difficult. So instead of taking 10 to 15, you're gonna take 4 trades now. Okay.
Okay.
I need you to write this down for me because after this one-on-one, I need you to send me everything I just said so I can put it in a file for you and then send it to you. All right. So I can give you your plan, your evaluation. You're gonna be taking 4 trades max per day. Now, on your account, what's the max amount that you're comfortable with risking on a 50K account per day?
I'll probably stick with the 100 so far.
With the $100?
Yeah.
Okay, perfect. Bet, there you go. So now you're going to take 4 trades per day, risking $100 per trade, targeting a 1 to 3 risk to reward. But here's the thing, your stuff is a little different. The moment you lose 2 trades, you're off the charts. The only way that you can take 4 trades is if you win the first one.
Mm-hmm.
And I mean, if you win the first one or win the second one, as long as you win 2. So if you lose 2 trades, you're not taking 4 for the day. You're done.
Okay.
That's the only thing that's harder on your end that you have to physically do, unless you're with Top Step. And like I said, you can just limit yourself per day. So just to recap on everything, you're going to be taking 4 trades a day, risking $100 per trade, taking a 1 to 3, 4 trades, and after 2 losses, you're done. But you have the potential to gain 3 to 4 wins. Or 3 to 4 wins. Because if you win your first 3 but lose the 4th one, you're done. See what I'm saying?
Yeah.
Now, what does this do? This promotes stability and flexibility. You have more flexibility more than some people because some people like only doing 2 trades. So you have more flexibility, but you also lack a little bit of stability because now you're stretching your stuff out. But that might be fit for you which is why I asked you, what's the amount that you would like to trade? So now to the other person, it may seem off balance, but to you, it's perfect. So that's about it right there. You can send me if you got everything typed down, send it to me, and I'm gonna put it in a file for you, pretty much like the one I just presented, kinda. And I'm gonna just give you that, and then I'm gonna put in a file, send it to you. That's your evaluation, and then you'll be good from there. And as long as you stick to that per account that you do, there should be no reason you don't succeed. I just taught us like Lily today. She just got a payout today, and she got a payout today. And she just started. And she trades way different. Like she trades something called a wrinkle brick, something way different than us, way different than y'all. And she applied that risk management plan. She only won 4 out of 10 trades every damn week. Sometimes less, sometimes more, but on average, that's what it was. And she got a payout. So all I'm telling you now, as long as you stick to it, you're going to get a payout. If you don't stick to it, you're not mechanical and you're not being consistent. You're the only person that can be, and you're not being that. So that's what that is. And hopefully everything made sense. And let me know if it did or if you need more clarification on something.
No, that's good. Thank you so much, Zeke.
Yes, sir. Got you. All right. So Um, let's get into everything else. Y'all can still hear me. Hopefully, y'all should be able to. I'm still on my phone. So that right there is somewhat of an example of yeah. I'm very to the point. Like yeah, I get straight to the point, bro. I'm not gonna lie. But um, that's pretty much an example of what my evaluations are like. That's what it is. I sit here and I evaluate you, and I understand what you need to do. What's your next step? What do you need to do? And we went over his capital preservation plan. You know what I'm saying? It's like his capital preservation. I gave him his capital preservation plan. So I'm not going to get back on my laptop because I want y'all to be able to hear me. But this is what I'm going to do because, you know, I'm really that guy. You know? Let's see. Hold on. Come here. Yeah, me and Romel got two different teaching styles. It's crazy. You know what I'm saying? So if y'all look in the chat real quick, I'm gonna just do it from my phone. I need all y'all to look at the chat. Look at the chat. The AMA chat, not the actual chat for the people that probably are going there. Anyway, what I just did with Quinn was I dissected what his issue was without even getting too deep. You see how fast that was? But usually I'm able to get into it more because I'll take a whole hour. It's a whole hour. And I'll knock it down with you. So pretty much we established what his issue was. And what was his issue? His win rate wasn't in confluence with his trade frequency. It's very simple. But he doesn't know that because he's the person doing it. He needs someone to tell him. He needs someone to help him do that, to identify it. It's difficult. I wouldn't be able to identify it if I didn't know about all of this, you know? So from there we said, all right, bet. You need to determine if you want to lower your risk or increase your risk based on your trade frequency. What did he say? He said, all right, bet. Yeah, I want to increase my risk, but he ended up keeping it the same. I want to keep my risk the same, but lower my trade frequency. Bet. And the thing is, with Quinn, I already knew everything that I was saying. He already knew because it was very easy. He already understood it. He knew exactly what he wanted, but he wasn't aware of it until I brought it to his attention. Or he was aware of it. He just needed confirmation. So the first thing that we did after that was we determined the step one in the notes. Set your loss limit, your ceiling. I asked him what's the maximum you're comfortable with losing. He said, bet I want to keep it at 100 per trade, which means what? $400. And he's taking four trades. So I said, all right, bet perfect. You already did that part for me. We divided the amount that he was comfortable with risking by the amount of trades that he was taking. He wants to risk 400 with 4 trades per day, so he's risking $100 per trade. Simple. From there, that's step 2. From step 3, we said we targeted his favorable risk to reward. We didn't even talk too much about that, but we're now targeting consistent 1 to 3s. We are not going for 1 to 8s. So for Quinn, I don't think I said that, but now you know. We're not going for any more 1 to 8s. No more. No more in that. Because sometimes the world hands you everything you want and sometimes it doesn't. But accept what the world consistently gives you. And you become your own food source. Don't rely on that 1 to 8. Bag that 1 to 3 every damn time. Every trade, 1 to 3, nothing more, nothing less. Sometimes something like, I ain't like nothing more. But yes, for sure, you want if the trade is going the opposite way and it's clear as day, go ahead and just bag that profit. You know what I'm saying? Consider that a win. If your TP's 300, but it's at like 220, but you know it's finna reject, go ahead and bag that. You know what I'm saying? But nothing more than that, bro. Because you want to do what's sustainable, not what's pretty right now. All right. And then the last part is track and adjust. You know what? I didn't even go over that part with him, but it's very simple. I can do that with him. But pretty much I show him how to track and adjust his trades based with points instead of actual documenting his flaws in the trade. Okay. So and that's the thing. Like, I don't have a problem with trade documentation, with documenting the trades. But once you can sit here and say that you know exactly what you're doing, well, in my opinion, this might be hella controversial, but in my opinion, if you know exactly what you're doing and you following your rules and you still have an issue with trading, journaling is not end all be all. People always say journaling is the end all be all. Journaling never helped for me because I already knew what I needed to do. Me writing it down never helped. I'm like, bro, I knew what I need. It's not like, bro, like I knew what I needed to do. The strategy is simple. Like, and Ramel saying it's not trying to strategy out. Yeah, like nah, like the strategy is very simple. I got like, why am I sitting here still journaling, nigga? It's not strategy, it's me. So I'm sitting here like, all right, what am I doing wrong? What am I doing wrong? Sometimes it's actually you because either A, you really don't know what the hell you're doing, or two, it's your risk management. Or three, here's the thing. Here's why what I do is highly beneficial to y'all. Because here's this. Here's what it is. I'm gonna screen record this. This is good. The reason why I say, hold on, let this start. 2, 1, boom. The reason why I say that capital preservation in my in Trader DNA build is really good is because for one, the main issue is the skill, but a lot of people understand the skill and they still struggle. So this is this is what it is. Listen, people still struggle after understanding the skill. And they always say the issue is psychology, right? But here's the thing. No one can help you with psychology. Ramel can't say anything that will fix your psychology problems. Neither can I, neither can Rio. We can only help you. We cannot change your psychology problems. But you know the one thing that indirectly affects your psychology? Your risk management and capital preservation. And y'all should be able to see now how that is and why that works and how it indirectly affects that. So I'm able to come in here and say, all right, Ben, these are your issues, or your issue with psychology. Let's actually replace it with this risk management and actually lock it down. So that I'm pretty much taking a person who got their leg broken, now they got to get their leg replaced. And my replacement is a fully working automatic mechanical robot leg, and now you can run and walk effectively. Like, you know what I'm saying? It's being able to go in and out of the market every day. Like, and it's not you. Why? Because if you try to use your leg, bro, it's broke. You can't. You can't walk. And if you try to, it's gonna hurt. Your leg broke. And you be out here trading with broken legs. I'm coming here to give you a new $200,000 fully functional extra boost Usain Bolt leg so that you can do everything that you need to do. You see what I'm saying? Because you're mechanical now. You locking it down. So that's that. Y'all got any questions or anything? Because that's how I move. That's how I roll. If y'all ain't got no questions, my job here is done. Let me see. One thing I will say is that I will go over. My last thing that I will go over is, let me see. If I want to, I'm gonna probably drop it in my announcements. The second announcement section, trade DNA, the file that we went over, so y'all can download it or whatnot. And we'll go on from there. But what's today? What is today? Today is the 16th, Thursday. On the 19th, tomorrow, I'll drop my schedule for one-on-ones. So if y'all need one-on-ones, y'all can do it there. And if not, I'll be doing these calls every Thursday, same time, every Thursday. Okay. Very, very simple. But if y'all don't got any more questions or anything, if everything makes sense, then we good to go. So do you feel like chasing 1 to 5 hours too much? Yeah, way too much. Well, it's only too much based on the general population, but can you consistently take a 1 to 5 consistently? Like, as God forbid, a gun to your head, if someone said, yo, 10 trades, at least 5 trades have to hit a 1 to 5 RR, can you do it? Because if you can, then hell yeah. But if you can't, then no. And most people can't. It says this was informative. Thank you guys. Thank you for sure, man. It says when trading a combine account, shouldn't you aim for that ratio? Aim for that ratio? Following Rodney's question. It says depends on potential and positioning you do for a trade. Aim. Okay. It says shouldn't you? Are you saying shouldn't I aim for a 1 to 5? No, I shouldn't. I should aim for what's consistent, not for what I want. Ramel gave an analogy the other day. He said, if you're sitting at a tree and the tree drops 3 apples, then you said thank you, but then it drops 10. It was something like this. I'm adding more onto it or something like that. But if a tree drops 10 apples, you can't continue. You can't expect 10 apples every time. After a certain amount of times that a nigga giving you apples, you're gonna come to find out. All right, bet the minimum he's giving me is 3. So let me accept 3 every time and plant my own apples, plant my own seeds. What are those seeds? More trading accounts. Multiply. Someone gives you 3 apples, you can't be mad that one day you only got 2. Yep, there you go. You can't be mad that one day you only got 2. Take what you can get and become your own food source. That's the end all be all. But what if you shake the tree for more? You're gonna get smacked. I don't know. Something gonna happen. This is not gonna work. Or the apple's gonna be poison, bro. The market don't play. The market gonna get you no matter what. The market gonna whoop your ass. Try to shake that damn tree. It's not gonna work. It's not gonna work. Vandalism. What's up, vandalism? That's funny. So yeah, man, that's about it. I'll be back in here on Wednesday. I said Wednesday, on Thursday. And check if y'all need a one-on-one. I'm dropping my link in the announcement on the 19th. All right. So my job here is done. Hopefully this made sense to y'all for the people that I was able to help. If I was able to help you, if you need more questions, just DM me and I'll get with you and whatnot. So but yeah, my job here is done. Appreciate y'all for having me. Y'all have a good rest of y'all trading week. And I'll see y'all next Thursday. All right.